Home loans do seem simple to get, but a lot of those loans do fail. So today I'm going to share with you what causes those loans to fail and what you can do to prevent your home loan from failing, or some steps that you can take. The first thing is a pre-approval does not guarantee that you're going to get a home loan. Let's just put that out there. It does have its use. The use of the pre-approval is to make sure that you can submit an offer to the seller. 9 times out of 10, if you do not have a pre-approval letter, the seller won't even entertain your offer. They want to know that you've been vetted a little bit with the bank or the lender, and that there is a possibility that you can afford to buy their home. And in order to prove that, you submit a pre-approval letter with your offer. The second thing is something that's called a conditional loan approval. The conditional loan approval is basically the loan officer submitting your file to an actual underwriter that's going to look at your bank statements, your tax returns, your paycheck stubs, to make sure that based on this information you've submitted, they can possibly issue you a loan with some conditions if you meet the conditions that they place upon you when the file comes out of underwriting. Now, sometimes a conditional loan approval can be done without a property, but most of the time they want you to have a property that they're underwriting to see if you can be approved to purchase that particular property. But one is a pre-approval letter, which means the underwriter has not seen anything on you or about you. It's just going off of a loan officer's quick tallying or information that they gather from you on the fly, and they do pull your credit to see if your debt ratios are going to be in line. The other one is the file is actually being submitted to underwriting so that they can kind of do a quick review and kick it out to give you a loan possibility with conditions. This is if you wanted to, for me, like when it's truck drivers get paid kind of differently, and so do nurses. The way their income is calculated and uh, tallied up is different from your typical person that gets a W-2 or even a 1099. So since truck drivers working for different companies make their income in a certain way, I like for the underwriter to take a look at their income to see how they're going to calculate it, whether it's going to be more income the truck driver receives or less income that that truck driver or that nurse may receive. And then it'll just kick it out with some conditions versus me taking a chance of not doing a quick conditional loan approval and just submitting it from the onset. And then we're trying to wait for a conditional loan approval to come out when we've taken the time, submitted the offer, we got a contract, and now we want to go through inspections and all of this stuff, but we're still waiting for the loan to be approved with conditions, but it comes out saying that it was denied. So when it's someone with questionable income, it's best to go ahead and let the underwriter try to underwrite the file ahead of time and give you a loan with conditions. However, that still does not guarantee that you're going to get a home loan. So let's go ahead and go into the main reason why most loans fail. The most crucial part of the home buying process to me is when you get to something called the clear to close. Most people don't talk about this. It's like there's a lot of external and internal research that's being done by people who's trying to buy a home for the first time. But I'm going based off of real live situations and real live complications that happens when you're actually going through the process itself. So the clear to close is when you get to the bitter end, the very end of the home loan process, and you're waiting for that underwriter to release your file, to stamp the seal of approval and send it over to the closing department so that the closing department can communicate with the title company with the numbers, the exact true numbers of what everything is going to cost. Now, if you don't get that clear to close or something called the CTC, you ain't closing. I don't care what happened in the beginning, that pre-approval letter, the conditional loan approval. When you get to the end to something called the clear to close, if you don't get that from the underwriter, all hell can break loose, and it does, you're not going to close because of one or maybe three of the things that I'm going to share with you. The first thing that can prevent you from getting a clear to close is this thing right here. Hopefully my writing is good. This is the first thing. Can you see it? Yes. Your bank statement. The underwriter, before they issue you your clear to close, is going to request three things. The first thing is going to be an updated bank statement. Now, believe it or not, I get a lot of my home buyers that will want to fight me over this. But before they fight me, I've learned to have an informed, excuse me, educated conversation with them about their bank statements when we get closer to the end of the loan process. And that informed conversation has to do with putting large deposits into their account. Now, if you have a family member or relative that wants to give you money, sometimes people get married and they have all this money, they just want to drop into their bank account. You can't be doing any shenanigans, no fooling around or of any sort, of any kind, when you're going through the home loan process. You want to leave that account alone. I've had people to say, sell jewelry. I've had people have garage sales and take all that cash and just dump it into their bank account. You cannot do that because now the underwriter is questioning where's, even though it's small money and most people are not trying to do money laundering, but putting 100 cash, 200 cash, sometimes banks have a limit on the amount that you can put in without them questioning it. But when you're dropping in $1,000, $2,000, $5,000, and all of this craziness, which I've had somebody that don't trust banks a couple of days before we were to close, drop in $5,000 in the account because they got paid for some services they performed. When you don't have a paper trail as to where that money's coming from, when you don't have proof or receipts as to where that money's coming from, now the underwriter is questioning what's happening here. And it draws up all kinds of red flags. So now they put the brakes on your closing. So that's the first reason how you can mess up your home loan and how you can run into trouble. The second reason is this thing right here. Now, the lender is going to do something that's called, can you see that? Yeah, a soft credit pull. Believe it or not, people that's buying a big house, it seems that the furniture stores, I don't know, they just kind of know that you bought a big house and you need to fill it up with some good furniture. So what they'll do is they'll run an advertisement, dangling a carrot, stating that, hey, if you come down to our furniture store today, you'll get interest-free for 2 whole years. And in addition to getting that interest-free bargain for 2 years, you're not going to have to make a payment for the first 6 months. So come on in, and it's only available for this weekend only. And then what do most people do? They run on down to the furniture store. They say, well, we're not going to make you make your first payment for 6 months, so your lender doesn't have to worry about it. But guess what? They don't understand how the home loan process works. So when you run down there and they do that soft credit pull, even though they're telling you they're not going to make you pay anything, and they have it in your mind psychologically that, oh, well, they're not going to make me make any payments, so therefore I'm okay with the lender. Wrong. What the lender is going to do is they're going to do their own soft credit pull. And they're going to say you went down to the furniture store to get yourself some furniture. And they want to know now, what would your monthly payments be in 6 months? And they're going to put the brakes on your loan. And they're not going to send over your closing documents. And they're not going to release your file and give you that clear to close that you so desperately need and want. And they're going to calculate that payment in 6 months into your new debt to income ratios. And if your ratios are already tight from the onset, now you just made yourself not be able to get approved for the loan anymore. You've just messed everything up. And you've also delayed the closing, because it's not that that can't be fixed. You can maybe bring somebody else in to go on the loan to help give you additional income that can get you out of the debt to income ratio trouble. But most of the time, That's not the case. Another thing you can possibly do is maybe put a little bit more down for a down payment to make the debt ratio fall in line. But either way, we have a problem. We have a delay in closing, and it's possible you won't be closing on your home loan until you fix and solve that second problem. It's not to say you have all these problems, but most of the time when the loan doesn't close, it's because of one of these three final conditions that the underwriter does before releasing your file and issuing you the clear to close. Now, the third thing that generally happens that will keep someone from closing on their loan is this thing right here. It's called a VOE. And what is a VOE? It's a VOE is a verification of employment. Got that spelled right. Oh, my writing is terrible. So the VOE, if you can see that, it's a verification of employment. And when I work with new home builders, and sometimes I've had a client to get laid off a week before the closing. And they go, no big deal. No big deal. I'm going to get a job right after we close. The problem with that is the lender is going to do a check the day or two before they issue the clear to close to make sure you're still gainfully employed. And if you're not gainfully employed, guess what? You ain't closing. So just remember, excuse me, when it get down to the final part of your home loan and the underwriter is ready to release all your paperwork and send your file over to the closing department and issue the clear to close so that the title company, and in Texas, we use title companies, when they're getting ready to finalize everything, they're going to do they're going to check on three things. The first one is they want an updated bank statement to make sure you haven't went crazy with either spending all the money or putting money into the account that's unaccounted for. The second thing is they're going to do a soft credit pull to make sure you didn't go furniture shopping. Mm-hmm. And then the last thing they're going to do is the VOE, the verification of employment, to make sure that you are still gainfully employed. I've had someone to retire and have a retirement party a week before closing. But again, if you don't get something called the clear to close or the CTC, you're not going to close. And that's where all the trouble and all the problems happen when we get towards the end of the loan and the buyer is frustrated. They're wondering, why isn't my file coming from the underwriter? How come it's taking so long for my file to come out of underwriting? Well, they're checking those things. And if you know that those things are okay, then you don't have anything to worry about. But they're checking on those three things, and of course with some other stuff too. But the main three things that they check, and the main three things that most people get into trouble the most, is when one of those three things are out of place. So for you, before you start ordering vacation time, taking time off from work, ordering movers and all of these things, you don't want to do that until you get the CTC, clear to close. So I hope this information has been helpful for you. And in another video, I'm going to talk more about if something does happen and they don't give you the loan, but there's a possibility that you can go to a different lender and still get a loan. Most people just give up once they say, we're not closing because the process was so hectic, and then they don't end up getting another loan when they could easily have done that. So until the next video, thanks for watching.